Hello dear students, with the request of so many students, I am doing this video and this video is especially related to the most important questions from the subject Indian financial institutions and markets. This is also completely a theory subject where there are no any calculations. So without wasting time, let us move on to the important questions. Again, in the important questions I have explained on the basis of unit by unit. So first unit 2 marks, 5 marks, 15 marks. Second unit is 2 marks, 5 marks, 15 marks, like that. So let us move on. See, I'm giving these questions or important questions or most likely questions, important questions on the basis of the syllabus of Bangalore City University. So this is a syllabus, right? So we'll go to first unit. First unit is purely about basics of financial system. So this is a chapter where you will understand the basics of Indian financial system. So if you want to know what is the meaning of financial system, so it is it refers to all the securities, intermediaries and markets that exist to make transfers from savers to borrowers as much as possible. See, it is a system where it will convert the savings into investments. So that is the meaning for financial system, we can say. One more meaning I can say here, financial system is like it is one where it's a set of institutional arrangements through which financial surpluses available in the economy are to be mobilized. The meaning is it's a platform where the savings from the individuals will be converted into the investments. So next we have types of financial system. So normally the types of financial system, we have major things. If you want to see in that, we have formal and informal, that is we can say for organized financial system and unorganized financial system. So organized means it will be having a set of rules and regulations, and they will follow set of rules and regulations which are prescribed by certain legal actions. But unrecognized or informal, in the sense there is no such rules and regulations, and there won't be any acts and all which should be followed by the organization which follows the function of financial services or financial system. That is two different types of financial system. So under financial formal financial system or organized financial system, the first one comes to financial institutions. So that's what here the third question asks about define financial institutions. So this is also known as organized financial system because it comes under the purview of Ministry of Finance or RBI or Securities Exchange Board of India. See, formal financial systems will work like that. So financial institutions are those institutions which an establishment that focuses on dealing with financial transactions such as investment, loans and deposits. So any institution which has a work and it focuses on dealing of financial transactions such as in making investment, providing loans or accepting deposits. Then the fourth one we have, what are the types of financial system. So when we speak about types of financial system, we have banking institutions and non-banking institutions. These are the two different types of financial institutions we have, and in detail we are going to study in the coming units. Then next one is, what are the types of banking institution? Again, in the types of banking institutions, see, banking institutions are one of the type of financial institution. That is the answer for previous question. And in banking, again, we have two different types of institutions. One is organized banking. So we can say banking institutions. Under banking institutions, we have two different types. One is commercial banks and cooperative banks. Then we have the next one is about financial markets. Financial markets are those place where there is a transaction of financial instruments will be done. See, financial instruments such as shares or debentures, those will be traded. The buying and selling activity of financial instruments will be happened in that particular place. You know what is the meaning of market? Market means it's a place where buying and selling of goods and services will happen. But here in the financial markets, financial market is one of the component of financial system. Under this, it's a place or any marketplace where the buyers and sellers are participating in trading activities such as purchasing or selling the assets such as shares, bonds, currencies or other financial instruments. That comes to financial markets. So this is another question that they may ask for 2 marks. Then what are the types of financial markets? Again, in financial market we have 2 different types. One is organized market, again unorganized market. I hope you understood what is meant by organized and unorganized. Under organized type of category, there will be strict rules and regulations or regulatory bodies will be there which will be taking care of all the functions of that particular sectors. But unorganized means there won't be any rules and regulations, or there won't be any regulatory framework like such as RBI or SEBI or IRDA, like that nothing will be there. So that comes to here, financial markets are in 2, and the 2 financial markets are organized and unorganized. Again, in organized we have capital market, money market, and unorganized we have money lenders and indigenous bankers. Then we have something they ask like define capital market. So under financial market we have 2, organized, unorganized. Under organized we have capital market, money market. So I'll say together here the definition of capital market and money market. See, capital market is a market where the what we can say like financial instruments which are having a convertible period of more than 1 year will be traded. More than 1 year will be traded. So long term instruments will be traded in capital market and short term instruments will be traded in money market. So in another way, if I want to say the simple meaning, say capital market is a market for financial assets which are having long or infinite maturity. For example, equity shares, debentures, preference shares, long-term loans. See, these are all the things which will be having a maturity period not for 1 year. It will be more than 3 years, 5 years, 10 years. Sometimes there is no maturity date at all. So we can call it as infinite maturity period. So those type of financial instruments will be marketed in capital market. And then what is the meaning of money market? See, money market is one where we are going to trade, we are going to sell or buy short term instruments. So which are the short term instruments? See, I can give some example like promissory notes, like trade bills or treasury bills, what we will call, or government commercial papers. So these are some of the examples which comes under money market. Then define financial instruments. See, again, what is the meaning of financial instruments? See, financial instruments are in total we can call all the financial assets and securities. All the financial assets and securities, we will call it as financial instruments, and it is also defined as an asset that derives value because of contractual claim. Either it may be periodical payment or it may be after certain maturity. So that comes here, financial instruments. Then what is the meaning of financial services? See, financial services are those which can be defined as the products and services offered by the institutions like banks. For example, the banks will not accept only the savings. See, they will give loan, they will provide credit card facility, they will be working as they'll provide insurance policies, they will give investment opportunities, they'll give even debit card facilities, demat account. See, these are all the services which I am going to get from banks. For example, online banking, we can say mobile banking. These are all the services which will be provided by the financial institutions. Then what is the meaning of financial services? In simple words, financial services means the services which are provided by the financial institutions will be called as financial services. Under financial services, we have so many types of services which is purely based on the fund based and fee based type. Anyway, I am going to explain in the coming slides. So next one is, what is a leasing? So what is a leasing here? See, leasing maybe you have studied even in accountancy. See, leasing is, it refers to a written agreement between lessor and lessee. Lessor and lessee are two parties who are involved in the agreement, whereas lessor allows lessee to use his property for a specified period of time, or rent is called lease. Here two people will be there, where one person or one, we can say lessor and lessee are the two people, and lessor is giving permission to lessee to use his property, and for using he is getting some money from the lessee. So that comes to leasing. So leasing is an agreement between two parties, lessor and lessee, where lessor gives permission to use the asset, and for that he is collecting some amount from the lessor, which is lessee, which is called as rent. Then next we have factoring. See, factoring is a new thing. So what is factoring? See, factoring is it's a process where sometimes when the companies wants to collect the debtors from the customers, or collect the loans from the customers, it will take a third party help. So we can say factoring are the institutions, financial institutions, which will act as a middleman between the person who has taken money and the person who has given money. For example, I have given money to X and I am unable to get, or I am unable to collect the money from X, in the sense I will go to some financial institution and I will say, on behalf of me, you collect the money, for that you take some commission. We'll call it as factoring charges. So that comes to factoring. In simple words, factoring means it is a facility provided by a factor to its clients, that is company, whereas factor purchases the debts or receivable accounts of the clients at a discount rate and offers immediate cash. This facility is called as factoring, and it is also called as account receivable finance. See, just now I gave an example. I have given some money to X and I am unable to collect, in the sense I'll take the help of bank and I'll request the bank, you collect the money and you take some commission or charges. For that, what they will do, suppose I have given 10,000, in the sense they will collect 10,000, they'll keep 500 rupees and they will give 9,500 to me back. That is immediate payment of cash will happen. That comes to factoring. Then next we have bill discounting. Bill discounting is another activity or a service which will be provided by the financial institutions, the public, those who are in need of it. It comes to like trading or selling bills to financial institutions prior to its maturity period or discount rate is called discounting bills of exchange. So before the maturity date we can get the money back, so that comes to bills of exchange. Then next we have something which is called as what is venture capital. See, venture capital is a way of financing by investor to the companies for its startup and promote the project. See, whenever a fresh or a new venture is starting or a company is starting, at that time any money which is invested by the individual, which will be called as venture capital, and normally this venture capital will be helpful for the common person to become an entrepreneur. So that comes to venture capital. Then what is the meaning of loan? Loan is an oral or written agreement between lender and borrower for a temporary transfer of property from lender to borrower, whereas borrower promises to return the same property or cash along with the predetermined interest. See, loan is a process, again it is an agreement between two parties where one person is giving loan to another person, another person is receiving loan from one person. So for that, what is an agreement here? The person who is taking the loan will say that I'll repay this loan along with its interest within specified time. For that they will give something as collateral security. That comes to loan. Then what is the meaning of hire purchase? See, hire purchase, I think you have studied in financial accounting, financial accounting, hire purchase accounting and all. See, hire purchase is again a system of selling goods on credit, whereas purchaser is allowed to purchase the goods and allowed him to pay the amount in various installments. See, for example, I am purchasing a car fund, I don't have money to purchase a car at a whole. Suppose the car is around 6 lakh or 7 lakh, in the sense I don't have money like 6 lakh or 7 lakh. So what I'll do, I'll make some down payment, and after that down payment, I'll pay a certain periodical payment, and later that possession will happen by me, or the complete documents will come under my name. So that comes to hire purchase. Hire purchase, again, it is an method of selling the goods to the needy person on the basis of periodical installments. So that comes to hire purchase. Then what is housing finance? Housing finance is another facility which is provided by the financial institutions. The major intention of providing this housing finance is for the purpose of purchasing any house or construction. The next we have what is portfolio management. See, portfolio management is another type of a service which is provided by the financial institutions. Portfolio means where rather than investing in one fund and getting a higher risk, we will allow the investors to go for multiple investments, so that in one investment, if you are getting loss, it can be compensated by another. So that comes to portfolio investments or portfolio management. Then what is loan syndication? See, loan syndication is a process where large number of lender contributes amount and grants loan to company or any project and share risk and returns of the same. So here under loan syndication, here the process will be for higher amount, the larger amount will be given to the people, those who are starting a business, and it will be kept or it will be implemented on certain projects. So after the project gets success, the return will be shared among the people. That comes to loan syndication. Then we have corporate counseling. See, corporate counseling is a set of activity which will be performed by the officials, and they will give suggestions to the people, those who want to do financial decisions. So here it is a type of information which will be given by the experts to the people, those who are in need of information. Finally, we have what is foreign collaboration. See, foreign collaboration is an alliance in an corporate to carry out agreed tasks collectively with the participation of resident and non-resident entities. See, foreign collaboration means one Indian company will be there and one more foreign company will join together, and they will take certain decisions which will be helpful for the development of the company, and this will happen through financial institutions. So that's why it is called as financial services, which is purely fee-based services by the financial institutions for the growth of the company. So these are 2 marks questions from the first chapter. The next we have financial 5 marks question. Under that, the first one is explain financial system and its type. Normally in financial system we have, it's actually a very big diagram. You can identify financial system, Indian financial system. So in Indian financial system is having organized and unorganized. Again, there is formal and informal. Again, in that we have financial institutions, financial markets, financial instruments, and financial services. So 4 things we have. You have to explain one by one. Under financial institutions, see, one suggestion I can give here, when you are looking into first chapter 5 marks and 15 marks question, you can write the answers for this question if you read 2nd, 3rd, 4th, 5th chapter, because 2nd chapter, 3rd chapter, 4th chapter, 5th chapter are 4 different types of systems which comes in Indian financial system. It's like banks, regulatory institutions, non-banking financial institutions, and financial markets. So if you understood those concepts, it's very easy. If I come back, say explain financial system. See, financial system, you have to explain with the neat diagram. Like it is having formal and informal, and its type we have 2. One is formal, that is organized, unorganized. Again, in organized we have financial institutions, financial markets, financial instruments, and financial services. Next we have the features and the objectives of financial system in India. So first I'll go with the features. What are the features of Indian financial system, or role or characteristics? We can say it plays a very vital role in the economic development of the country. It encourages both savings and investments. It helps in lowering the transaction cost and increases the returns. It links both savers and investors. It is helpful in bringing investments. It facilitates the expansion of financial market. It helps in allocation of funds, so and so. There are so many features which are available for financial system. And what are the objectives of financial system? The major objectives are like savings. Then we have industrial investment. Then we have capital formation and accelerate the growth of, that is progress of economic growth. So four important things we have. The first one is changing the mind of the individual to save something from, invest something from the savings. Second one, the purpose of mobilizing fund is to help the people, those who are in need of money. You can take an example. See, what is the meaning of bank here? Again, I'm going to say bank is one where which gives, which will be taking money from whom the money is there, and it will give money who are in need of money. So that comes here. The people, those who have money, they will do the investment, and for whom it is required, it will be given to those people at a rate of interest. So that comes to where it will be helpful for the industrial development. Third one, stimulate capital formation. Yes, see, ultimately why I am saving today, tomorrow it will be helpful for me. What is the intention which is behind my investment? Which means it is going to give some income for me in the future, either it may be short term or long term. And fourth, to accelerate the process of economic growth. Yes, see, if an individual invests, then per capita income will increase. Per capita income is directly dependent on national income. National income will increase the standard of living of the employees. Developing country will reach the stage of developed country. So developing country will reach the stage of developed country. So it happens where individual person starts saving something. So this comes to the objectives of financial system. Next we have characteristics. So just now I said features and characteristics of, here again, sorry, characteristics of financial institutions they have asked, right? See, financial institutions characters, I can say it is a institution which will be giving lots of what we'll say, it will act as a middleman between the person who is having money and who wants money. We can say he acts as an intermediary, and it is a channel for the people, those who want to save the money. It is a channel for whom they want to save the money. It accepts the deposits. It works according to the government rules and regulation. It provides commercial loans, real estate loans and mortgage loans. It includes the both organized and unorganized institutions. It includes banking and non-banking financial institutions. Then it creates financial assets such as deposits, loans, securities, and so on. So we have so many. You can write any 3 or 4. Yeah. Next we have write a neat diagram of Indian financial system and explain. Yeah, just now I said, right? So organized, unorganized, first thing. Next it comes to financial institutions. So when it comes to financial institutions, we have banking institution, non-banking institution. Again, in banking institution, we have commercial banks, cooperative banks. Again, in commercial banks, we have public sector bank, private sector banks, regional rural banks, and foreign banks. So likewise, for each and every head, such as financial institutions, financial intermediaries, financial securities, services, and financial markets. So for these 4 you have to write. And next they have asked, see, explain the classification of financial institutions. If financial institutions are 2, banking and non-banking, that you have to explain. Next, classification of financial market. Again, financial markets are in 2, organized, unorganized. Again, in organized we have capital market, money market. Again, third comes to financial instruments. So what is the meaning of financial instruments? See, instruments which are traded in financial nature, that we will call it as financial instruments, right? So it comes especially short-term instruments and long-term instruments. Short-term and long-term instruments, that you have to write and explain. Finally, explain the classification of financial services. Again, in financial services, we have 2 different types of services. Which are those? One is fund-based, which means they will give certain fund which will be helpful for the development, and another one is fee-based financial service. They'll give the service, for that they will charge something. So that comes to fee-based financial services. This is about first unit. So we'll move on to second unit. Second unit is purely about banking institutions. It is first branch of a financial system, that is financial institutions. So under financial institutions we have banking institutions and non-banking financial institutions. So in second unit we'll study about banking institution. Right, banking institution, what is the meaning of bank? See, bank is a place where they'll accept the deposits and they'll lend the loans. So we can say it is originated from Italian word banco, which refers to desk or bench, which is used formerly, or the ancestral bankers who have used this particular desk for doing their banking transaction. Later we have having very updated or sophisticated or very innovative type of banking transactions, but the way where it started, it was between the persons there will be a banco. So we can say meaning. First I'll say meaning before definition. A bank is a financial institution which accepts the deposits from the bank public and lends the money to required individuals and the institutions. Then what is the meaning of bank? Definition of bank, I can say here, according to Walter, a banker is an institution or individual who is ready to receive money, who is always ready to receive money on deposits to be returned against checks of their deposits. So they'll receive the deposits, and whenever we are giving check, they'll return our investments. This is a small definition. One more definition. See, according to R.S. Sayers, defines a bank as an institution whose debts are widely accepted in the settlement of other people's debt to each other. In simple words, you understand, bank is a place where they'll receive the deposits and they'll lend the loans. Next we have retail bank. So what is the meaning of retail bank? See, previously we were never used to see this or listen to this retail bank. What is this retail bank? See, retail banks are also called as personal banks. PERSONAL banks. So these they will execute the transactions such as directly with the customers rather than corporates or other banks. See, direct, if they are having any individual banks, individual is having account with the bank, in the sense then that particular bank comes to retail banks. Then next we have community bank. What is that? What is the meaning of community bank? See, community bank are locally served banks. So community banks are locally operated financial institutions that empower employees to make local decisions to serve their customers and partners. See, you can I think you have seen one particular bank which is there near to what is that? Vidya School stop. We can see Saundarya Sauharda Cooperative Bank. See, that particular bank, we can't find the branches all over India or all over Karnataka and all. No, it's not there. It is there in selected place of Bangalore around. They are not having much. And even you have seen Tumkur Tumkur Merchants Cooperative Bank. See, this is just, it is because of taking care of Tumkur merchants, it has been started. So here it is called as community banks. For serving certain group of people in the community, the banks will be started. That comes to community banks. Then next we have investment banks. See, an investment bank is a financial institution that assists individual also, cooperatives also, and government also in raising capital by underwriting and or acting as a client agent in the insurance security. An investment bank compares merchant bank and venture capital firms in the territory. See, investment banks are those banks which will be acting as an underwriter. Who is an underwriter? When it comes to if I am having a company and I am going to issue certain shares, in the sense that share issuing process will be taken by the individual or particular institution. So that particular institution will be called as the investment bankers. The next we have commercial banks. So commercial banks are also called as normal banks. There is a slight difference. What is the difference? See, commercial banks are the banks which will be dealing with deposits and loans from a corporations or large business, not individual. If it is individual, it comes under retail bank. If it is from corporations and large business or companies, in the sense it comes to commercial banks. So next we have something which is called as scheduled bank. What is the meaning of this scheduled bank? See, under classification of commercial bank we have two. One is scheduled bank and non-scheduled bank. Okay, under scheduled bank, RBI is the highest monetary authority which is having where all the banks which works according to RBI called as scheduled bank. They have to follow the rules and regulations which are given by RBI. So those banks will be called as scheduled bank. So in definition, I can say like banks which have been included in the second schedule of RBI Act of 1934, those banks are called as scheduled bank, and they have to fulfill two conditions. Which are those two conditions? The first one is the paid up capital and collected fund of the bank should not be less than 5 lakhs. And another one, any activity of the bank will not be adversely affect the interest of the depositors. So these two things should be there. Then we have next one is cooperative banks. So the cooperative bank, again it is a bank, it comes under scheduled bank only. So cooperative bank are the banks which will play a major role in Indian financial system. And what is the meaning of this cooperative bank? See, cooperative banks are the bank which are formed to help that particular community, or that particular, so they'll be having cooperative association, and they'll be having bank, and it is only for the people, those who work in that those who are the members of that particular cooperative society. So the members, those who are there in that cooperative society, only can be as a part of bank. Investors or the loan who they are taking will they can become as a banking customers. Then next we have overdraft. See, overdraft is one of the facility financial service which is given by the banks, and it is not provided, or it is not given to all the account holders. It will be given purely on or purely to only the people, those who are having current account in the bank. And what is the meaning of this overdraft? Overdraft is a facility given by the banker to the customer when the customer can withdraw the amount in excess of balance. Suppose I have balance 10,000 and in emergency I need to make the payment to my supplier, in the sense I can issue a check for 15,000 and I can ask the creditor or the supplier to take that particular, he can surrender that check and he can get the money, and 5,000 later when I get the money I can give back to the bank. So here it is a facility which again it will not be given to all the customers, it will be given to loyal customers. Loyal customers means the customers who are having very good relation with the bank. So how an individual can have very good relation with the bank? They can have a very good relation with the bank once they are making the payment as a prompt payment within time. If they are paying, definitely it is possible. Then next we have cash credit. So cash credit is another facility. It is in the form of working capital, the capital which is required for a business to run day-to-day affairs. Under this, the agreement opens an account, and the amount will be sanctioned and it will be credited to his account, and it will be purely on individual or goods security, and this is very advantage, and the banks will charge certain interest also on this. And this facility can be taken by the companies to manage their working capital. Suppose for doing my working capital transaction, if I'm not having money, in the sense I can take cash credit. Then next we have discounting bills. It is another important primary function of a bank, where the bank will purchase inland or foreign bills before these are due for payment from the drawer debtors at discount value. It gives less than the face value, so that comes to discounting bill. Then we have credit creation. See, credit creation is one of the important financial services which will be provided by the scheduled banks. So under that, the meaning is, we can say, it appears when bank sanctions a loan to customer and it does not give cash to him, but a deposit account is opened in his name and the amount is credited to his account. See, credit creation means, suppose I'm not having any bank account and I'm taking loan from HDFC, in the sense once the loan is sanctioned, they will open an HDFC Bank account in my name and the amount will be transferred to my account. So that comes to credit creation. And what liquidity, the last one, liquidity means it's a, and again it is also one of the situation where to identify the position of the bank. So how it is important and why it is important, we can say liquidity means where the company or the banks which are having sufficient cash or not. It means it is also called as ability of the bank to convert the non-cash assets to cash. How fast we can convert the assets into cash, this process is called as liquidity. This process is called as liquidity, and the banks will face so many issues when they want to convert it into cash. So that comes to liquidity. So this is 2 marks question. Again, I'll move to 5 marks. See, for 5 marks, explain the features of features and objectives of cooperative banks. So for the cooperative banks, there will be so many what we'll call intentions which will be there once they started. So when they have started their banking activities, they'll provide the loans, they'll provide the it is called as, it will be even called as available of or providing sources of fund to the people those who are in need, and they'll provide services. Suppose if the people those who started the business, if they're having certain issues in running the business, in the sense they'll provide certain guidance to the people those who are in need of it. So that comes to the cooperatives, and I'm not going to explain much here because when it comes to non-banking financial institutions, I'm going to explain you cooperatives or cooperative banks in detail. Normally in cooperative banks we have two, that comes to urban cooperative banks and rural cooperative or rural cooperative credit institutions, which will be urban means which will be working under Cooperative Societies Act, and rural cooperative means it will be on the basis of state cooperative, district cooperative and primary cooperative societies. So next we have to identify the difference between scheduled bank and non-scheduled bank. See, sometimes this will be asked even for 14 marks also, where you have to write the first basis you can take a meaning. See, under scheduled bank, meaning is where a scheduled bank is a bank where the corporation which should have a minimum capital of 5 lakh and it should not harm the interest of the customers. But non-scheduled banks are those banks which comply with, there is no rules and regulations. Without any rules and regulations they can. Then second one is they should have second schedule, which means they have to be registered under RBI if it is scheduled bank. Non-scheduled bank, there is no need of listing and all. Then cash reserve ratio, again I'm going to tell you what is the meaning of cash reserve ratio in coming chapters. So it should be, cash reserve ratio means we have to maintain the ratio, or we have to maintain certain reserve in the RBI if we are starting with banking business. So that is mandatory in scheduled bank, and there is no mandatory for scheduled bank. Non-scheduled bank, they can maintain with themselves. It's no need to maintain in RBI. Then borrowing, scheduled banks are allowed to borrow money from RBI for regular banking purpose. Non-scheduled banks are not allowed to borrow any money from the RBI. So here for normal business transaction, RBI will help scheduled bank and it is not going to help. Then next it comes to returns. Returns, RBI for scheduled bank it should be remitted or it should be submitted periodically, and for non-scheduled bank no need of submission and all. Whatever the profit comes or whatever the income they get, that can be distributed among the owners of that particular non-scheduled bank. Then members of clearing house, it can become scheduled banks can act as a clearing agents, but non-scheduled bank can't. Then next we have the importance of commercial banks. Why it is required. Commercial banks are required to help the people, those who are starting their business. As we know, commercial bank is a bank which is helpful for identifying the or helping the people, those who are in need of money for business purpose. right? So we can say it is like it will be helpful for financial transactions, and it will help the commercial institutions to earn profit, and the transactions which are socially and legally approved, if any transactions which happens in commercial bank, and commercial banks will become responsible for customers deposits. So there are so many importance. And finally, write a note on investment policy. Write a note on investment policy of the commercial banks. See, whenever the commercial banks are taking investment from the general public, they have to follow certain rules and regulations. They have to follow certain rules and regulations, and those policies which will come, like liquidity should be there, profitability should be there, safety and security should be there, diversity should be there. So these are all the things which, apart from this, we have so many, so that should be identified and should be paid attention. And 15 marks, explain the classification of commercial banks. Again, commercial banks are classified into two categories. Again, which are those two categories? The commercial banks, scheduled bank and non-scheduled bank. And we have to write under scheduled bank, we have public sector bank, private sector bank, and foreign banks. Then explain the functions of commercial bank. So commercial banks will perform larger functions such as accepting deposits, lending loans. See, we can say all the functions which performed by a bank will be performed by commercial banks. We can say primary function is accepting deposits, advancing loans, and credit creation. Secondary function means agency function and general public utility function. So these are the functions of commercial bank. Then role of commercial bank. So what type of role it plays? It plays a very major role. Like, banks will promote capital formation, and it will be providing investment for the new enterprises, promotion of trade and industry, development of agriculture, balanced development of different region, influencing economic activity, implementation of monetary policy, monetization of economy, etc. There are so many. And finally, explain which sources. Explain from which sources the commercial banks can get the fund. So they can get the fund from so many sources. We can say sources of funds and application of funds. So the sources I can tell here, where as a bank I can issue shares and I can raise the money. And from reserves and surplus, I can get the money for running a banking business, and I can make certain deposits in some other company, and I can use that particular deposit whenever I require. Then borrowings, as a bank I can take loan from another bank. We can call that as a bank. From the bank we are getting a bank which is going to get loan from another bank, which especially the banks will get the loan from RBI. Then finally, other liabilities and provisions. So other liabilities and provisions, we can say they'll maintain temporary funds to adjust short-term obligations. So from here also they can get the funds. So this is about second unit. Third unit is regulatory institutions. So whatever the financial institutions which are there till now, what we have discussed in the second chapter, or other financial system which is there in India, it has to follow certain rules and regulations. So for that we have certain regulatory bodies. Certain regulatory bodies. The majorly I can say RBI, Reserve Bank of India, which has started in the year 1926. It is the bill which is passed in the Parliament was that is in the Assembly was 1927, and it has came into existence in 1st April 1935 after so many amendments and all. And initially RBI's headquarters was in Calcutta. After that it has been shifted to Mumbai, and it is having its branch offices in zonal offices in Mumbai, Chennai, Kolkata, New Delhi, and it has regional offices in Bangalore, Bhopal, Bhubaneswar, Lucknow, Kolkata, Jammu, Jaipur, Mumbai, Nagpur, Patna, Thiruvananthapuram. So in so many places where they have sub office also, they have academic center also, subsidiaries also they have. So there are so many things are there to learn here. So first we'll go on to the 2 marks question. So under that 2 marks question, the first question is about repo. What is this repo? What is the meaning of this repo? see, whenever a company wants to take any financial assistance, it will go to bank and it will take the loan from the financial institutions. But when a bank wants to take loan, when a bank wants to take the loan, at that time how that particular bank will get that loan? See, that comes to repo. So repo rates, normally we'll call it as REPO, repo rates. So the repo rates are those rates or the amount which will be collected, or the rate at which the amount will be lended by RBI to the banks, the general banks, right? So that comes to repo. Next we have the meaning. Give the meaning. Sorry, it is 5. It's not 5. Give the meaning of financial intermediaries. See, financial institutions will become as the financial intermediaries. They will act as an intermediate between the individual and the people, those who are doing business, or the bank. Sometimes the banks will act as a middleman between other two banks. So that's why we will call it as financial intermediaries. To perform our function, they'll help. Suppose I am purchasing certain product from a particular company where I have to make a payment. When I want to make a payment, first I should have bank account, and the person who wants to receive the amount also should have a bank account. But now without that bank account, the transactions will happen. So who is placing a bridge role here? Banks are placing a bridge role. That's why they are acting as an intermediary between the people, those who are in need of money, and the people, those who are having money. So then give the meaning of open market operations. So open market operations, we can say it is one of the method to control money supply. Always RBI will want to decrease the money supply, and it will compel commercial bank and other institutions to purchase treasury bills. So that is open market operation, we can say. Then we have expand SLA and CLR. SLA means statutory liquidity ratio. Statutory liquidity ratio. Then cash reserve ratio. Cash reserve ratio. These are the two explanations for SLA and CLR. So then we have mention any two subsidiaries of RBI. So any two subsidiaries of RBI, which means the other regulatory bodies which are performing in India for taking care of activities of any business. So we can say National Housing Bank, or we can say Reserve Bank of India Note Mudran Private Limited, BRBNMPL, that is Bharatiya Reserve Bank Note Mudran Private Limited. This is one of the subsidiary of RBI. Then next we have like something which is called as, what do you mean by malpractice? See, I think you know about the meaning of malpractice, right? What is the meaning of malpractice? See, malpractice normally will say that, oh, it's a thing where one person is copying another person. One person is copying another person, and that we are going to call it as malpractice. No, it's not like that. See, in finance or in financial system, what is the meaning of this malpractice? Sometimes whenever the institutions are following certain rules and regulations, the same rules and regulations will be implemented by the state government also. Same information or same rules and regulations will be implemented by the state government. So certain times same guidelines will be given by 2 or 3 institutions. So those type of rules and regulations we will call it as malpractice. Then what is the meaning of insider trading? See, insider trading means the people, when it comes to trading activity, that trading activity will happen within the bank. So here there won't be any two banks, will be only the trading will happen between banks, one bank and another bank. So that comes to insider trading. Then what do you mean by factoring? I already explained you. Factoring is a function which will be performed by financial institutions where they will collect the money from so and so, and they will charge certain they'll charge certain commission on that, and the remaining amount will be paid to the person. So that comes to factoring. Then we have something which is called as bank rate. Bank rate means it's a rate at which the bank will provide the loan facility. We can call it as even interest rate also. So sometimes it will be called as reverse rate, reverse repo rate and all like that. Then next we have what is CRR? So what is the meaning of CRR? CRR means cash reserve ratio. See, cash reserve ratio means all the commercial banks are required to maintain certain amount of its deposit with RBI. So that RBI deposit will be called as CRR, that is cash reserve ratio. The next we have state any 4 functions of RBI. Again, when it comes to functions of RBI, the same question can come for 5 marks also, and even for 15 marks also. For 5 marks also, and even for 15 marks also. So when it comes to functions, it issues we can say currency notes or currency principles. It issues principles, methods, or functions of note issue will be the first function. Then bankers to government is a second function. Then credit control is a third function. It acts as a custodian of foreign exchange reserve is another function. Then it acts as a clearance house. It acts as a lender of last resort. It acts as a promotional functional. So these are all the things which we can call as the functions of RBI. Then they said expand SEBI. SEBI is another important body like RBI to control certain activities. So what is that? So it can be called as Securities Exchange Board of India, and it is formed under the Defence of Indian Act 1939, and it came into existence in April 12th, 1988, and non-statutory body 1992. It is started as Securities and Exchange Board of India as a statutory body. So that is SEBI, Securities Exchange Board of India. Next we have the another question which comes here is state 2 credit control system which are used by RBI. Normally RBI uses 2 different methods. One is quantitative and another one is qualitative. So under quantitative method we have bank rate policy, open market, lending rate policy, repo rate, reverse repo rate. Under qualitative method we have fixation of margin, regulation of consumer credit, direct action, variable portfolio ceilings, and moral succession. So there are so many credit control methods. You can write any 2. Normally bank rate policy or open market or repo rate or reverse repo rate you can write. Next we have 5 marks. So when it comes to 5 marks, explain the objectives of monetary policy. See, monetary policy here it is considered as it refers to the use of certain regulatory tools under the control of RBI in order to regulate the availability, cost and use of money and credit. Normally this policy works under Indian financial system only. Under that, where major regulatory framework is to maintain the supply of money in the economy. So that for that they have certain objectives. The first one, ensure price stability of commodities in the country, ensure balanced credit expansion, ensure the growth of long-term investments in the economy, ensure proper balance of exports and imports, encourage food procurement operations, ensure proper distribution of credit to all sectors of the economy, and so on. The next we have explained the objectives of SEBI. When we are starting with the SEBI, that is Securities Exchange Board of India, with certain objectives it has been came into existence, such as to protect the interest of the investors in the security, to promote and develop the securities market, to regulate the securities market, and for any matters which are connected to securities exchange market it can be carried. These are the major objectives of SEBI. Then we have the objectives of RBI, that is Reserve Bank of India. So what are the objectives of RBI? The first one is to manage the manage the monetary and credit system in India, to stabilize internal and external value of the rupee, to balance and systematically develop the banking sector in India, to develop organized money market in India, to properly arrange for agriculture. And so there are so many objectives. You can write those. See, for it, if it is asked for 5 marks, you write some 5 to 6, it's more than enough. If it is for 14 marks, there are around 12 to 13 objectives. You can write all the objectives, whichever you remember, and you can get highest marks. Then finally we have discussed the process of open market operation. See, open market operation, just now I said, it is one of the important credit control method. It is one of the important credit control method which is there in the Indian financial system under banking institutions, where they can issue or they can make the transactions at open market, where anybody can purchase the share and anybody can sell the share. Anybody can purchase the share and anybody can sell the share, and there will be minimum guidelines. There will be certain minimum guidelines, and they can go for that. And apart from that, there are something like they have to follow the rules and regulations of RBI. Then 15 marks, explain the functions of RBI. Just now I said it has several functions. The RBI has several functions, such as function of note issue. The first one is about issuing the notes. That is 10 rupees note, 20 rupees, 50 rupees, 100 rupees, 500 rupees, then 2000 rupees, like that notes. And second one is bankers to government. So they'll act as a bankers to government. The banks will not provide the loan only to the individual, they'll provide the loans even to the government also. Then bankers bank, here RBI acts as a bankers bank, where banks will not provide only the banking facility to individuals and government, it will provide even to other banks. Then credit control, to avoid the situation of money supply and to maintain the inflation. Custodian of foreign exchange reserve. Exchange rates fluctuation can be standardized by using RBI. Then clearing house, lender of last resort, promotional functions, and so on. Next we have again that one I have explained here. Functions of RBI are into promotional and regulatory functions. Second one, what is credit control system? Discuss the qualitative and quantitative credit control system. See, credit control system are under two categories: quantitative method, qualitative method. Under quantitative method, we have bank rate policy, open market operation, lending rate policy, repo rate, reverse repo rate. See, this repo rate, reverse repo rate, bank rate. See, these are all the things which will be asked for even 2 marks. Then qualitative, we have fixation of margin, regulation of consumer credit, direct action, variable portfolio ceilings, and moral succession. So these are the things. And finally, for 15 marks, one more question is like, what is SEBI, and explain the functions of SEBI. See, this is a question which is repeatedly asked from this particular chapter. So what is SEBI? It is a platform which take care of all the share trading activity with an interest of investors. And what are the functions? The functions are broadly classified into regulatory function and development function. Regulatory function and development function, and you have to explain those things. Then fourth important chapter, we have non-banking financial institutions. See, these are also called as financial institutions, but the thing is here, the institutions will not do any banking activities such as lending loans or accepting deposits. These two functions will not be performed. Any financial institutions which is not performing banking activity, that financial institution is called as non-banking financial institution. Again, non-banking financial institutions are divided into two things. One is organized and unorganized. So what is organized, what is unorganized? Let us discuss one by one. So we have first one, define non-banking financial institution. So what is the meaning of non-banking financial institution? Non-banking financial institutions are all those institutions which are engaged in business of hire purchase financing, housing financing, investment financing, lease financing, loan financing, and mutual funds. Mutual funds. So these type of institutions we will call non-banking financial institution. Next, second one, we have explain the any two objectives of IFCI. What is the meaning of IFCI? Industrial Finance Corporation of India. IFCI, they may ask even for expand IFCI, Industrial Finance Corporation of India. And this particular thing which has started under the intention of promoting the industries, especially the medium and long-term financial institution assistance which will be provided to large-scale industries. And what they asked two objectives. What are the two objectives? I can say first one is about providing loan facilities. Right, I was discussing about IDBI, Industrial Finance Corporation of India. So this is a finance corporation which has given more importance for the development of industries in the India, especially large scale industries. Then what is the meaning of IDBI? So again, it is also comes under another criteria or a institution which performs like Industrial Development Bank of India, and this particular thing is having an objective of coordination, regulation and supervision of other working activities of the financial institutions, planning, promotion of development of key industries and diversification in industrial growth. So that is about IDBI. Then we have EXIM. EXIM is another bank which is having a function of export and import bank. And it is working under the act of EXIM Bank of India Act 1981. And what is the objective of this one? The objective is to provide financial assistance to exporters and importers to act on business principles with due regard to public interest. Then we have what do you mean by mutual funds? See, mutual funds one of the other type of instruments which are available. We can say this is another non-banking financial institution. So which are that? See, mutual fund is defined as an investment vehicle that is made up of a pool of funds collected from many investors for the purpose of investing in the securities such as stock, bonds, money market instruments and similar assets. Normally, what is the meaning of mutual funds? Mutual funds means, as the name itself says, fund which is created for mutual interest. See, for example, for investing in certain company shares, I don't have 10,000. So what I will do? Four people will join together. I will put 2,500. Remaining 3 people will put 2,500. They'll get 10,000 and they will invest, and whatever the profit comes they will share. That comes to mutual funds. Then we have state any two types of mutual fund. So when it comes to types of mutual fund, we have based on structure, based on investment, based on scheme. Open-ended scheme, closed-ended scheme, internal scheme, growth scheme, income scheme, balanced scheme, money market scheme, tax savings, special scheme, index scheme, and so on. There are so many. Next we have IDBI. So what is the meaning of IDBI? Just now I said Industrial Development Bank of India. It is repeated. Next we have SFCs. So SFCs are considered as state finance corporations. So especially these are the things which are providing financial assistance to the industries which will be established within the state. And the loans which will be provided to them will not be having more than 20 years of repayment time. Next we have list any 4 NBFIs, that is the non-banking financial institutions. If so, we can list like such as NABARD, IFCI, IDBI, EXIM, SIDBI, SFCs, LIC, GIC, UTI. So these are the examples for non-banking financial institutions. Next we have something which is called as payment bank. What is that payment bank? See, payment bank is a bank which we can say like a payment bank has a categorized as a scheduled bank, and it is conceptualized under RBI. And what is the meaning of payment bank? See, a payment bank is like any other bank but operating on similar scale without involving any credit risk. There won't be any risk for doing that particular business. In simple terms, we can say it is like carry out most of banking operations, but it cannot offer advanced loans or such as credit cards. Just they will whenever you, if you want to do, you can do the banking activities, but we are not going to provide any loans to you. That comes to payment bank. Next we have 5 marks, that is explain the organized and unorganized non-banking financial institutions. So we have organized and unorganized. Under organized we had discussed something which is called as RBI, SEBI, IDBI, those things. When it comes to unorganized, we have identified so many types. Then state the difference between commercial banks and NFBIs. So we can say the difference between commercial banks and non-banking financial institutions. First difference itself, now commercial banks will be having the activity of buying and lending, but non-banking financial institutions will not perform buying and lending, that is accepting deposit and lending loans. There is one example which I gave. State the functions of SFC, State Finance Corporation. So State Finance Corporation will be having lots of functions. You have to write any 5 to 6. Then we have any functions of and objectives of IFCI, EXIM. Then we explain various types of mutual funds. There are so many types of mutual funds, you can explain one by one. This can be asked even for 15 marks. Explain the functions of mutual funds, what are the functions which performs and what is the benefit, we can say. And explain the features of payment bank. So first feature of the payment bank itself is it will not provide any loans. It will give the payment. For example, it provides only debit card, not credit card. 15 marks, we can write the classification of NBFI. It is majorly classified into two, organized and unorganized. When it comes to organized, we have IDBI, SFCs, mutual funds, those things. When it comes to unorganized, it comes to funds, chit fund. It is not, we are not discussed anything here. Like funds, chit funds, investment institutions and so on. And finally, next we have explain the features of NBFI. It is having certain features such as it will be in always small size compared to commercial banks. It will be having less capital investment compared to commercial bank. Under the non-banking financial institutions, the loan will be available at easy standards. And it is always unsafe loans, and rescheduling of loans is possible, especially for short term and long term, which will not be recovered. And lack of coordination compared to commercial bank. The people, those who are working, or the things or coordination between the people, those who are in NBFIs and general public is not so good. Annual report and balance sheet will not be given to the depositors or to the general public. They have to fulfill the needs of the economy, but majorly it is not happening, and it is having independent policy from commercial bank, and it always perfection in work. That is features. Explain the advantages and disadvantages of mutual fund. Whenever we say mutual fund, it's a fund which is created for mutual benefit. There are so many advantages and disadvantages, limitations. We can say when it comes to advantages, it is return potential. It will be always having a return. It will be helpful for liquidity, transparency, flexibility, well regulated. It will be having net asset value, low cost, etc. But when it comes to limitation, there is no guarantee of return, and fees and commissions are high. There is no any tax facility if I invest in a mutual fund. Managing risk under mutual fund is very high risk. If we are not having knowledge, it's not possible to manage the risk. And fluctuating returns, it always fluctuates the returns. Then diversification is not possible, and it always, the advertisements which comes under television for mutual funds, it misleads the people to invest in mutual funds. Finally, we have last one, very important chapter, financial markets. Financial markets I can give an introduction. My financial market is a place where the exchange of capital and credit, including money market and capital market instruments, will be taken place. It's a place where the trading of financial instruments will happen. First we can go with the what do you mean by government security market? So government security market is a market where only government securities are traded. Only government securities are traded, or risk-free gilt-edged instruments are traded. Second one, industrial securities market. Industrial securities market is one where only the industrial securities are, or company securities are traded, such as equity shares, bonds, or debentures. Then we have IPOs. The meaning of IPOs comes to initial public offering. So what is the meaning of that initial public offering? Whenever a company issues the shares for the first time under primary market, that comes to IPOs, that is initial public offering. And after that, for further continuation in the market to mobilize the fund for the working capital requirement, then it comes to FPO, that is follow on public offer. Follow on public offer, that is. Then we have EIPOs, that is electronic initial public offerings. That is EIPOs are electronic initial public offerings, which will happen through electronic media. Then we have right issue. It comes in shares, especially a right issue of share. Whenever a person who purchases any company share, he will be having the voting rights. So he will be having the voting rights, and that right issue will happen whenever the company issues the shares at the right time. And this one we can say, even these are the securities issued to the existing shareholders as a statutory right to meet working capital requirement. To the existing shareholders, the companies will issue the shares. That comes to right issue. Bonus shares. Bonus shares are the shares which will be issued by the companies to the existing shareholders, in addition to the existing shares, in the form of bonus. Instead of paying bonus in cash, they will pay in the form of shares. Then private placements. These are the securities which are offered to a private individual or group, and these are not available to general public to invest. It will be for certain group of people only it is available. That will be called as private placements. Then we have merchant banker. See, merchant banker is a person who carry out the work of underwriting and portfolio management and issue management, etc. Especially underwriter. Just now I said in the previous chapter, banks will act as underwriters, which means when the company wants to issue the shares, when it is issuing the shares directly to the general public, it will go through certain financial institutions where the banks will act as underwriter. They will collect the share capital and they will give it to the companies. Then next we have a stock exchange. As a name directly says, a stock exchange. Stock exchange is a place. It is another name we can call it as secondary market. Stock exchange is a place where the shares are traded. It also used or refers to the market for any sued goods or assets, or an alternative use for an existing product or asset where the customer's base is on the secondary market. Then we have a listing of securities. Listing of securities is one where whenever if I want to purchase any particular company share, in the sense that particular company has to make entry in the stock exchange. So that comes to listing. Listing means enrolling our company name in the stock market. That comes to listing of the securities. Then short selling in trade. So what is the meaning of this short selling? See, whenever the person who sells the shares in the money market or in the capital market, he will sell the shares for a minimum period. On the basis of the period only, we can say it's a short selling. It's a short selling. And always when we speak about short selling, it depends on the conversion or the period which is needed to convert the cash. So if suppose I am purchasing today, in the sense within fraction or within 2 days or within 3 days or 9 days or 90 days, those are the things which will be formed as short selling. And in detail about those things we can discuss later. And we have broker. Who is called as a broker? See, broker is a person who provides the information and he provides the opportunity for us to invest, and for that he will charge something, because we can call it as commission. Again, he is a person who is acting a bridge between the person who want to invest and the banks which are issuing, sorry, companies which are issuing the shares. So that comes to broker. Then we have something which is called as jobber. So who is called as a jobber? See, jobber is a person, again he's a person where he will provide he will be having the job of identifying which company share rates are going to increase and which company share rates are going to decrease. We can say jobber is a professional speculator who has a complete information regarding a particular share which he deals. And next we have bull. Who is called as a bull? Bull, he is also a speculator who purchases various types of shares, and whatever he purchases he sells when the price of that particular shares increased in the future. Then who is bear? Bear is a person, again he is always in a position to dispose the securities which he does not possess. He makes profit on each transaction. He sells the various securities for objective of taking advantage of expected fall in the price. Then next we have lame duck. Lame duck means he is also one person where when bearer fails to meet his obligation, he struggle to meet finance like the lame duck. This may happen when he has not concerned. Generally, a bearer agrees to dispose of certain shares. So here any loss which is occurred by bear, that can be compensated by lame duck. Then what is the meaning of stag? Stag, he is also a speculator. He purchases the shares on newly floated company and shown himself as a genuine investor. Means in the beginning itself he will purchase and he will express as this is good company and I am the first customer. That is stag. And contango is another one. Contango is means to came over dealing to a settlement. The broker is paid a reward to carry out the settlement. So here the sales and buying activity will happen, and for that we will call a procedure which is called as settlement. At the time of settlement, a person who takes care of without any disturbance, if the settlement is happened in the sense, certain charges will be paid to that person. That is called as contango. Then backward in, it is an interest which is paid by the seller of the securities to the buyer who wants to postpone transaction to the next account. Suppose I have agreed and I am postponing, in the sense I have to pay certain charges because I am postponing. So that charge will be paid to a person. That comes to backward end. Then we have a discount banker. See, discount banker is a person, again here the banker will act as a person and he will charge certain amount in the form of collection, and when he is paying the amount he will pay in the discounted rate. Then we have online stockbroker. Who is online stockbroker? See, online stockbrokers, we have so many people nowadays. We have so many people such as that is Sher Khan. We have Team Lease. We have angel brokers. So there are so many stockbroking agencies where they will through online they will provide very cost effective brokerage services, and up to date information will be provided to the investors for making their investments in a proper way. So this comes to 2 marks. Then for 5 marks, there are so many questions they may ask. Differentiate between primary market and secondary market. Explain the functions of primary market or secondary market. Explain the classification of financial markets, again capital market and money market we have, and write a note on online trading. What is the meaning of online trading you can write, and why it is important. See, nowadays if we have a smartphone we can do online trading within fraction of second. Then what is the meaning of insider trading? We have to write. It's just a note. They may ask. Write a note on short selling in trading. They may ask what is the meaning of it. So online trading, short selling in trade. So short selling is one where it is also defined as selling a stock which the seller does not own at the time of the trade. So I'm not the owner, just I will say that I have and I will sell. So directly it will be transferred from the real owner to the real investor. So next we have speculation. So what is the meaning of speculation? Speculation is a process which will be, or a situation which will be used to avoid the risk. So we have to write, and why it is required also you can write. To avoid the risk we use speculation. Then for 15 marks, yes. This is very important chapter. For 15 marks, explain the importance of functions of the capital market. There are various functions which will be provided carried by the capital market. Can say like some of the things where it helps the people, or it helps the person to mobilize the savings. It provides a platform to the person to invest, right? So like that we can say the functions and the importance of capital market. There are so many functions are there. You may write the important functions like primary functions and the secondary functions, where it comes to the need, or you can say it mobilizes the savings, it helps in capital formation, provision for investment revenue, speed up the in economic growth, proper regulation of funds, service provision, continuous availability of fund, and so on. Then we have a classification of capital market. The capital market is broadly classified into four. One is government securities, industrial securities, development financial institutions, and financial intermediaries. Then explain the structure of money market. Again, we have for the money market a particular structure like short term and long term. Again, in the short term we have the categories such as commercial bills, or commercial papers, or bills of exchange, like that is organized and unorganized. So we can say bill market, 364-day bill market, certificate of deposits, commercial papers, and so on. Again, organized we have RBI, scheduled banks, commercial banks, development banks, RRBs, foreign banks, state finance corporation. Under unorganized money market, we have indigenous bankers, domestic money nidhis and chit funds, trade and finance, brokers and dealers. We have so on, so on, and so on. Explain the functions of stock exchange. Yes, SEBI. Again, it comes even here also, because trading, when it comes to financial services trading, that is market, primary market and secondary market. There are certain functions of stock exchange. Don't get confused. Functions of stock exchange is different, and functions of SEBI are different, which was there in the previous chapter. So we have functions such as continuous and which will be ready for market securities, providing market prices, facilities, evaluation of securities, bank leading, serves as economic barometer, provides safety and security in dealings to the investors, regulates company management, provides clearing house facility, facilitates public borrowings, provides healthy and speculation environment to the investors, and so on. We have write a note on BSE and NSE, so Bombay Stock Exchange and National Stock Exchange. So you may write certain important information related to NSE and BSE, the features you can write. Then explain the regulatory framework of stock exchange. So it has to follow certain rules and regulations, the regulatory framework for stock exchanges. It has to follow the rules and regulations such as underlying factors. We can say economic growth, low interest rate, it should have stability, it should go for international transactions, speculations and expectations. It has to manage supply and demand. Then it should not give any much ambiguous informations to the general public to make confusion. So there are so many legal framework for stock exchange that can be followed by the stock exchange. So these are the things which came. So we, still something if I want to add here is governing body for stock exchange. We can say the central government is the one which creates the rules and regulations for the SEBI, stock exchange. Okay, so this is about the international financial, Indian financial markets and institutions subject. All the best. Write well. Thank you.